What's up, everybody? Welcome back. Jerome and I have another very important video for you guys. Today, we're going to be diving deep into what backtesting is, not only in general in any trading market, how you can backtest any pair, any asset, but we're going to be specifically focusing on a few currency pairs and how the ASFX edge, specifically the A1 entry, which we teach in our beginner's course, how that entry signal has presented over the last few months. So, Jerome, I'm excited for this, bro. You know that I've been looking forward to this video. Yeah, man, the Instagram community, everybody's excited.
We're going to get a lot of value from it.
Yeah. So we're going to get right into it. I'm going to kind of turn everything over to Jerome. He's going to share his screen and walk us through this amazing spreadsheet that he's built. But if you guys find value, make sure all we ask is that you give us a thumbs up and subscribe to the channel. That way you stay up to date with our videos, whether it's me and Jerome, me and Lindsay, whoever it is making some trading content for you. And you're going to help us spread this value to other traders in the community. So now that we're done our little intro, Jerome, let's just get right into it, bro.
Let's get it.
Share your screen. So show us what you got.
So for everyone asking questions, like we get a lot of questions about back testing and, you know, what's the purpose of it, how to do it and everything. So what I want to demonstrate in this video is kind of go through statistics, how the ASFX A1 system performs and pretty much the advantages of backtesting a system and kind of how it helps with gaining confidence and really helping your psychology in executing trades in the live market.
Before you get into this, Jerome, I have a question for you.
Yeah.
What motivated you to do this? Because off the jump, I feel like everybody's going to be seeing this and they're like, all right, this is clearly very detailed. What motivated you to take the time to go into so much detail to test the system that is supposedly already tested by me in building the course, which it is. But what made you do this on your own too?
I think a lot of people kind of agree with this answer, but as a trader, when I first got into trading, having a $500 account, you don't think about the long-term effects of trading a bigger account. So it's easy to throw money on a trade that you're not confident about with a smaller account because you're only losing a smaller dollar monetary figure.
Sure.
So when I started trading a bigger account, I hesitated a lot on actually putting the trigger on trades I was taking on a smaller account, even though I knew I should be involved in them.
Okay.
So I said to myself, if I kind of knew the statistics, if I knew how many trades in a row I'll be losing, or the win percentage, you know, or the parameters and how they affect the outcome of the trade, it would help me dramatically in trading the live market and
it would just help you be more
trades I
confident.
need to be in. Exactly.
Yeah.
So having this data in front of me, knowing how the system performs on different pairs and what the parameters we use in ASFX and how it's going to affect the outcome of the trade, it significantly helped me just executing trades in the live market. So I think a lot of traders, yeah, exactly. So, I mean, I always kind of refer back to signals. You know, if you're taking a signal server, and this is why signal services don't work, you don't know how that system's performing.
Right.
So you could take 4 losing trades in a row and you could hesitate on that 5th trade and not pull the trigger, but that trade is the winning trade.
Not even that, like that could be the next, you know, that could be the first of 7 winners in a row that would weigh out.
Exactly.
Right. So yeah,
exactly.
I think it is interesting though, because I feel like a lot of traders in this cycle of like a life cycle of a trader, if you would imagine that, they get to this point in their career where they feel like they have a system, but maybe it isn't, like maybe they come in at a period where there are losses and it's like a make or break moment for them. And where I find like a lot of people that, you know, become successful and consistent like yourself, it is when they do go into the back testing and they do take the time, even though it's in the course and tested and we share it every day, like you're in the coaches chat with me and we're sharing these ideas. When people take that next step and do the research like this, like you're going to show us, I think it does do something to your mental confidence when you show up to the live market. 100%. Totally agree with you. So when you did this back testing, was there any statistics that really stood out to you as like, wow, this makes a difference? This, you know,
yes.
Here. Yeah. I want to know about that. I think that's what we all want to know, because a lot of people watching are already in ASFX and they're going to know the language that you use, the L50, the TDI, the Asian range. And if you don't know the language, if you don't fully follow what we're talking about, watch our other videos. We explain it in other videos here on YouTube, but it is really detailed in our courses, which there will be information linked below for that. So for members of ASFX, you're going to pick this up pretty quickly. Now, speaking of that, Jerome, what was it that stuck out to you the most out of all the statistics? Anything?
So with the spreadsheet, you can filter everything. So as we know, in ASFX, the people that are involved in the group, we have parameters we follow, and those parameters affect the outcome. So obviously this is how we grade our setups.
Right.
So trending, counter trend, we can trade both ways, but we know trading against the trend is obviously less probable. So you can filter them out. So you can get rid of counter trend, and then you'll just have all trending markets.
Okay.
Coming forward into that, you can have, we know we have the swapping liquid 50s, perfect L50, that affects the trade outcome. You can filter, I don't personally trade swapping the L50s, so you can get rid of that.
So what you can
Now,
do is really filter down like the checklist of questions that we ask ourselves, and then you can see what would be the highest probability trades, right?
Yeah.
So if you were to set this up like an A setup, what are you finding with like A setups in the back testing?
So I think a lot that's happened in 2020, and a lot of the ASFX members have kind of questioned this, is an overextended candle.
For sure.
We know from being involved in the market and watching how the market reacts to overextended candles, they come back down. So you can see on the left, we have a 61.9% win rate now, trading perfect L50 and trading full trending market on the
but also a
15
26% loss rate too.
Exactly. So pay attention to that as well. So when you get rid of overextended candles, you go from a 61 to a 68.2%, but also a 17.8% loss.
Now, is that because you're adding more wins and more break evens? Is that what's happening?
Exactly. Because we're getting a bigger push now. You're locked. Because also, just another thing to mention, the way I've tested this is price is pretty much stopping. I'm locking my stop at 1R and taking 50% off at 1.5R. So that affects, that's kind of how I manage my trades. And that's just kind of how I'm back testing it to kind of just get a very rough figure. So these results can be kind of tailored to how you want to test it. And that's all up to you.
So let me give you another variable. Like for the, were you about to take the Asian range away?
Yeah. So you take the Asia rate. So this would be like, and it goes up to 75.6% win rate.
Yeah.
So this is kind of, I would say a B setup, because you got to remember with Divergence and RSI, that is still one knock I'm having in there.
Okay.
Now, Divergence,
so you're saying, hold on. Wait, don't go too fast. So you're saying with one knock, we've now increased. So we went from trading swapping liquid 50s.
Yeah.
Now cutting those swapping liquid 50s out. We've now cut out trades that are just inside the Asian range. So now we're looking at trades that already are broken out of the range. And even if there's divergence present potentially on some of them, you're still looking at a 75% win rate and only a 12% loss rate.
Exactly.
So dude, if you take the divergence out, what are you seeing? Like 90% win rate? It's probably crazy.
Well, no, because I'm locking my stop, and because obviously it's going to dramatically reduce the amount of trade sample size.
True. Oh, wow. Wow. Look at that. That looks like that looks like my trading over the last few months. For real.
This would be your A+ setup. This is like when all stars align.
Yes.
You don't really see this very often, especially in 2020 with everything going on. There's always something conflicting. There's always been a news event, breaking news.
For sure.
So it's been hard to kind of...
what pairs are those on?
So coming over, it's Euro JPY, GBP USD, Euro Aussie, and Euro CAD. So you got a few there. And mind you, this whole sample size is over 200, about 230 trades so far.
You know what I noticed too right here? A lot of shorts.
Yeah.
Okay. And I also notice all of it is 2 candle formations. 2 candle formations come after a shift candle.
Shift candle. Exactly.
So really what you're looking at here is like a breakout, a pullback, a retest, so to speak, and you're trading that formation in that direction of trend.
Exactly.
So then those are my favorite trades because you know where your stop level is. They're so easy to read. What are you doing with the higher time frames in this?
So I actually haven't. So this is another thing I haven't, because with TradingView, when you go back so far, as soon as you jump up to the 1 hour, there's no longer 15-minute data. So it chucks you right back to the current day. So what I'm still going to, it's easier for me to go back on the 1 hour to these dates because I've tested it from the 1st of the 1st, 2019.
Got it.
And I think with that sample size, going back on the 1 hour, it's only like, it's not many bars away because you got so much candle information in the 1 hour.
Sure.
So higher time frame bias, definitely from just recent back testing I've done, helps a lot. And I've also got a spot in here as well. So I've got higher time frame confluence and I'm just using the 1 hour. If I can match the 15-minute EMAs in trend and the 15-minute, the 1 hour TDI in trend that's complementing the 15-minute. That just from personal experience has a massive outcome as well. So that's something I'm going to add into the back testing.
No, I think that makes perfect sense. With this, let's go back real quick. Can you add the divergence in? Let's get some more trade sample size back. So let's say there is divergence present. Now, with a sample size here, how many trades are we looking at?
I'm 41. Say about 40.
40, 41.
Yeah.
Yep. Okay.
Yeah.
So if now, and that's throughout a year, basically 40 trades throughout the year.
Throughout the whole year, exactly.
And of course, this is only on a few currency pairs, right? We're looking at 4 pairs, 5 pairs in total. So
you're looking at 4 pairs.
Even at that point, quick math, let's say you do 40 trades a year, 40, how many per month would that be? A little less than 4, right?
A little less than 4, yeah. So 1 a week, roughly.
Roughly 1 a week. I mean, that does line up very similarly to.
And you got to remember, this is just one system.
That's what I'm saying. So that's just the A1, only on a few pairs. So even at that point, though, I guess where I was trying to get with that is like, you're not getting a ton of trades. So what it's showing me is like, if you can actually be very selective and get a lot of these columns in the spreadsheet to fit what a good trade is, no divergence, no overextended candle, you're going to put yourself in a high probability winning scenario, it seems like.
100%.
What's the risk reward that you were looking at in the markups? Were you only marking up trades that could go 3R, or were you marking up trades that could go 1R potentially too?
I did. So what I did is, you can see I did 15 pips. So I wanted to find the average mover.
Okay.
And then I went 1R, 2R, 3R, 4R, 5R. And then I measured the peak. So how far can we get runners?
Wow.
Depending on the parameters.
Okay.
And I forgot to get the averages on there, but you can see some pairs were going like at the end were like 8R plus 6.5R.
Wow.
So obviously the way we trade, we like to leave a little bit of our position in, and we kind of scale out at our multiples.
Yep.
So, with your Euro CAD trade yesterday, like exact example, like if you're going to take targets at like 2R and then be out of the trade, that could just, especially if it's nowhere near the average daily range, you could just ride that all the way up.
You're just leaving money on the table.
Exactly.
Yeah, but at the same time, you have to be conservative too. You can't be like, oh, this is going to be above 80R just because it was yesterday, so to speak. You know what I mean? So it's a balance.
Yeah,
maybe
exactly.
If you don't mind me asking you another question, with the you said the average winner. Do you have distance on how far the average A1 entry is going?
Yeah. So basically, I kind of measured it to 3R. So more or less, we're getting 2R out of the system.
Okay.
You can see that, but also again, you are getting 3R as well.
Now,
so that's why I've done the trading.
The reason that there's these dashes there, it's because it didn't go that far. Is that what I'm seeing?
Correct. Exactly. Okay. There was no data for that that trade.
Got it. Yeah, you do see a lot of 2R. Every single one of them is basically going 2R, it looks like.
Yeah, pretty much.
3R.
Even without any of the parameters, you're still getting that 2R, but that's about where it ends.
Like so the reason I asked that is because I want to set you up to explain. Now, again, this is controversial, hot topic, taking partial profits. So would you be more profitable if you were to take all profit at 3R or get stopped? Or are you more profitable taking partial at each R multiple like you said we do?
Long term, I know this is going to sound weird, but you are actually more or less the same or even sometimes better off taking partial profits. Yeah. Now, because I get a lot of questions about this, aren't you screwing up your returns?
Everybody asks that.
But you can see here, this is what you're seeing up the top. That's based on all 230 trades, non-filtered. So partial profits, 104.5% return. Non-partial profits taking completely, taking the whole position off at 3R, 196. But I think me and Nelson were just talking about this before. It comes down to psychology. I'm happy taking smaller, consistent wins than, getting break even, stop loss, break even, stop loss. I'd rather take a little bit by little bit. It helps my psychology and helps me become a better trader because I'm, it's a little bit like it's a rewarding factor. You know what I mean? So I think a good example of this, because I'm locking my stop at 1R, price can just come back down sometimes, or if I'm locking my stop at 1R, price can sometimes come back and stop you out at break even. But because I'm taking profits off at 1.5R, if it comes back out and stops me off, I've bag some of that trade.
You're already net positive on the thing no matter what.
Exactly.
Yeah.
And it's risk-free at that point too.
I
So
definitely
like,
agree with you on the psychology stuff. Definitely.
yeah. So that's how I see it. So if you look at this period here, you know, if you're taking complete profits off at 3R, let's just go from over here. So you've had a 3% winner, and then you go from like take a trade, break even, take a trade, break even, take a trade, break even, take a trade, break even. But if you look at after
That would be
profits,
so frustrating.
yeah, it would, because as day traders, you know, we're at the screens, you know, 2, 3, 4, 5 hours plus, like depending on your trading session and how you trade. So like when you're following a system like this and you can see taking partial profits, you know, you're up 2.25%, great trade. And then you're up, you know, 0.75. Okay. You know, I was right in my analysis. I got bagged some profits and I got stopped out. That's okay. You come back the next day, break even, come back the next day, bag some profits, next day, break even, bag some profits. So
That whole mindset though, of like you just said, come back the next day, that's the key. And I think it goes back to what you said at the beginning, is that doing this testing makes you confident that you can come back the next day and find these type of trades still,
100%.
but you have to have a system. And it's funny that we're doing this video now because Lindsay and I are planning out that webinar for the end of January. And what we're focused on in that is exactly this, that most traders don't have a system. And that's one main reason why they're not consistent. And then the second reason is that they break the system. They go off edge. But this testing, I think, should convince you, number one, if you don't have a system, that you need one. And number two, if you do have a system, why you shouldn't break the edge, because this testing shows you the long-term impacts of staying committed. And like you said, even just taking that small bag. Because how many people, I mean, even though it's a 12% difference, you're looking at 184.5 and 196. You're looking at 12%. At the point of making a 200% return over the course of, what is this, a year?
Almost 2 years.
2 years. So you're looking at
you got 2000, all of 2019, all of 2020 pretty much.
Yeah, so 2 years. So if you're looking at 2 years, 12% is not going to be make or break at this point. You know what I'm saying? So the psychological value that and I think you do too, Jerome, the value that we place on taking small bags, seeing that you win every day and that you don't lose money consistently, that has so much more value than the 12% extra return that you would get. 100%.
I mean, I'm not going to sit here and say like my psychology is the best in trading. Like I'm human. We're not robots. We're going to make mistakes. And if you're going like 2 weeks and you're getting break even, you're gonna start making mistakes. Emotions will creep in a little bit. You're like, you know what? I'm gonna take this trade. This one, you're gonna be like, this is it. This is the one. It
happens, bro. Yeah.
You know what I mean? Like it's just gonna get frustrating. But if you have consistent winners, you know, it's not enough to make your ego go crazy, but it's enough to be like, okay, cool. Like I'm getting rewarded for my process.
Exactly.
You know, I'm making money. It's consistent. Small wins, but
I'm not losing money like the 90% of people that get into trading.
Exactly.
So after doing all of this, because this clearly has taken you hundreds of hours of time to put this together properly, what is the big takeaway for you that now people are watching this and they're going to go do their own testing and build their own spreadsheet? But what have you taken away from this that you now are going to go forward with, other than the confidence? Is there anything that stands out to you that's like, I'm never trading this, or I'm only like what?
Yeah, exactly. So like you said, with the confidence, but also like look from 230 trades to about 40. Selectivity is, I think, the key with ASFX. When you come into the market and you know the ASFX, you will find signals present every single day, like the D1, D2, A1. 100%. But like you always say, Austin, like every trade doesn't deserve our money.
Right.
And this is exactly a great example of saying that, because yeah, we can take every trade setup, but we got to put all these probabilities, all these parameters in our favor. And it definitely affects the outcome. And having that selectivity and being selective on the trades and not wanting to trade every day just for the purpose of trading, you can see the results speak for themselves. Like this is mathematical. This is just,
you can't argue with this.
Can't argue with it. You know
That's
what I mean?
it. Exactly. We both said it.
And
yep. Exactly.
Doing the markups, like I still do the markups on these trades.
Right.
Like,
and you save them there.
The markups.
Right.
Like they're in there.
Right.
So I can go back, I can check the markups, I can see how the trades performed and all that stuff. So yeah.
2 more questions for you. What do you think is a good time frame to go back for back testing for a lot of people that are watching and they want to do this for themselves? Because I don't know if you need 2 years worth of data. I honestly think you might have gone a little overboard. What do you think?
I agree, because we are trading on a lower time frame. We're trading on the 15-minute. The sample size you're going to get like if you're trading on the daily, you're going to have, if you're doing the A1, just to say you're taking the A1 setups on the daily, you're going to have 2 trades throughout the whole year.
Right.
You know what I mean?
Right.
So it's just one of those things where you're on the lower time frame. I think that outperforms the sample size you're going to get is going to outperform, going back years.
Right. So if you're saying if you're trading on a high time frame, you need more data because
exactly
moving slower. But if you're doing, we're doing 15-minute, 1 minute kind of thing, 1 hour even, you don't need 2 years. So what would you? Exactly. I tell people 3 to 6 months. Do you think that's reasonable?
I think it is, especially even with the day-one systems, you're under 1 minute.
You're going to get a lot of ideas.
Exactly. You generate tons of ideas throughout a week.
And markets change. You know what I mean? That's why I feel like if you go back a year, it might be different. It might not be, you know what I mean?
Well, this is another thing too. Like, I can't remember who I was speaking to, but I'm like, seeing these results in 2020, where you've had US election, global pandemic, recession, geopolitical events, riots. 2020 has just been one of those years. And we know we've had a quiet period. The markets haven't been behaving like they should. Market behavior has been different. Stocks only go up this year. Like, everything's just been one of those, it's been one of those years. So to see this performance in a system trading the FX market, it's very promising to see it can just survive such a year with so much financial, I wouldn't say disaster, but just difference.
What's even more promising is I've seen this now for 5 years because my first spreadsheet goes back to 2015. Now it's not as great as your spreadsheet, but now I have.
Yeah, but the results are there. Yeah, exactly.
Very similar percentages. And now we're 2 different people putting it. I mean, because you and I are similar, bro. That's why we work well together. Because like I go overboard too. When I did this for my first testing, when I built the A1, the beginner course.
Yeah.
I mean, hundreds of markups, way too many. Did not need that many, right? Just unnecessary. Yeah. But I wanted to be that sure about it before I put my name on it and put it out to the world. But now you go back to those markups, they look the same as the patterns we're trading today, and the statistics still look the same. So it shows you that I think because something about the Forex market makes it more technical analysis, more price-based than any other market. And I think it's because you're not seeing gaps and you are seeing it controlled by whatever bank or institution you want to say is driving the change in currency rates. I do think that to some extent it is controlled.
Definitely. 100%. And that's just like, I think, and there's not much manipulation in Forex either.
Right.
You know what I mean? Like
no, controlled doesn't mean manipulated. I don't mean manipulated. I mean controlled like in the sense that algos are controlling it by placing certain orders that are based on interest rate decisions and things like that, But no, I don't think there's a lot of manipulation, which is why these patterns continue to work time and time again. Because algos are trading it, and the algos are pattern recognition machines that are just repeating patterns. That's why I think it works. That's what you're showing with these statistics is that the patterns repeat. And if you can narrow down the patterns to be high probability ones with the indicators that we use, you got a winning strategy. So my final question for you, if you could go back to when you first joined ASFX, would you ask yourself or would you tell yourself to do this sooner? Or do you think that it came to you in time and it was appropriate, like you needed to go through some stuff? Or would you just go back and jump right into the backtesting?
That is such a great question. I think I would do it exactly how I've done it. I experienced the system. I demo traded it since April for 3 or 4 months, and I didn't do any testing on it because I saw people in the group trading it. I went through the course, and because it was so systematic the way you're teaching it, it's like you can't mess it up. It's so rules based. You write down the rules. You know when to get in, where to put your stop, and how to manage your trade as it progresses.
Yeah.
So I was just doing that, and I was profitable. So I'm like, okay, cool. But as soon as I started putting my live capital after 4 months into it, that's when I found myself just not getting involved in as many trades as I should be. And then that's when I got stuck into the back testing just to build, like you're saying before, my confidence. Yeah.
Got it. And now I think like what you've said multiple times in this video and what I take out of this, selectivity is the answer. Selectivity is the way. Do less, do it better, do it bigger. 2021. That's the focus, right? Because
that's it.
That's what this test. That's it, man. That's what this testing shows. It shows you that even if you are like, again, just going back to what we showed at the beginning, if you were to take the divergence trades away, which I do sometimes, and so do you, you're not trading that often, but you're winning so much more than you're losing, and you're not giving back bigger losses than your wins. You're profitable.
Exactly.
You know what I mean? So I think a lot of people get caught up in the social media, what other traders say they're doing, what the hedge funds say they're. All you need is a system, guys. For everybody watching, if you're this far in and you're not in ASFX, of course, we recommend you check out what we're pushing. But at the same time, just find a system. Like you need something that you can test, prove repeatable, and then filter down to high probability trades. That's what a system is. And this is, dude, your work here is incredible. I seriously am beyond impressed.
Value from this, like, it just shows the importance of following a systematic plan. If you're jumping into the market blindly and you're just taking trades here and there off a feeling or just kind of a pattern you see regularly without testing it, make sure it performs well over time. Like Austin was saying, he's got these systems and this pattern from 5 years ago. Like, you can't, and we're seeing it perform more or less the same statistics in 2020.
Yep.
So, I mean, not to brag about a system, but there are systems out there like this, but you can see it firsthand that these results don't lie. Like, it's just testing it. Like, it's just insane to see this. Like, I've tested systems before with 45, 50% win rate.
Yeah.
Like, but without the trade management and everything. And it's just like seeing the system, how it performs, even trading, because I trade the system.
Right.
Like, I got the results, like, you know what I mean? Like, it just, yeah, it's just amazing. And just seeing these results, I just look forward to getting a much bigger sample size now. Like, this is 230 trades of like 4 pairs.
Exactly.
Imagine doing all the GBP and Euro pairs, you know, and getting over 1,000 trades of sample size and then seeing, I just think it'll be amazing.
It's good that you say that too, because for everybody listening, they're probably thinking like, oh, Jerome doesn't need to keep doing this. He don't do this back testing. No, he does. Like, you have to say,
I do it every day. Yeah.
You got to do it every day. It's like going to the gym. You can't, it's so important for your brain to see these patterns and to practice seeing the patterns. You have to look at it like it's the gym, you know?
Yeah, exactly. And that just, like, with my spreadsheet too, like, don't get me wrong, I've spent a lot of hours. Like, I'll just give you a quick example. Like, I mean, let's just say you do a trade and like, I'm one that needs everything kind of like, you know, so if you go trending, it's already, if I can spell right, hang on. It goes green already.
Right, so you already have it set up to be very easy for you to be efficient.
Yeah, so counter trend that's already red, and then same thing. So if I'm short, and as we know, you know, if you're short and that L50 is rising, it's already a knock, you know what I mean?
Right.
Same with like yes or no to the swapping L50, it already does it. And also short, you kind of, if you have a bullish candle, you know that could affect. So that's already red as well.
That's like, awesome. I love that does that.
Yeah. So everything's more or less kind of just, it makes my process a lot easier. I just go through, fill it in, and it just kind of simplifies it a lot. So,
love it.
But I hope everyone got value from this. Like, it's just, it's good to see. Definitely.
It's definitely good to see. I think it's beyond value, honestly. If I was,
and the equity curve, like, I mean, let me add back in the divergence just to get more of a sample size, but it is just like, it's so clean.
Yep. Throw that back in there.
You know what I mean? Like,
yep. Not bad.
Up and up. Like, it's just, you take little hits, drawdown periods, but it makes its way up. Yep. Like, it's just very clean.
That's how any good equity curve should look. But dude, this has been a really good.
Yeah. So blue line, partial profits, red line, non-partials. So once again, coming back to that topic, because I get a lot of questions of people asking that, does it affect long-term results? And as you can see, 12% over 2 years. I mean, to have something affect my psychology in a way where I can come back the next day in a good mood, mindset, looking for the next one best trade.
No, because in the other way, you're going to be in trades that are going to move in your direction, come down, stop you out. You were right.
100%.
You got no money.
Even that, like, I've taken my full position off at 3R. Like, I haven't even tested the ones that go, 5+.
Yeah, man.
You know what I mean? So these results in terms of equity curve could be
expand. Yeah, exactly. Yep. But this has been great, Jerome. I really appreciate you sharing this info with us. I know that everybody watching is going to find value in it. And I think that now what we can do going forward for everybody that watched all the way through, let us know if you have any more questions about this, because I'm sure Jerome is happy 100%. To keep talking about it. I definitely could keep talking about it. So we want to make sure that you guys not only understand how to backtest. If you don't from this video and our previous video, comment below, let us know. But we also want to make sure you understand why you need to backtest. And on top of that, how the ASFX systems test when they are backtested. So you got to see a little bit of that in this video, and I'll make sure that I link our first video down below and above so you guys can watch that as well. But between the two of these videos now, bro, I feel like we've kind of given people a good foundation for our system being tested, how to go about their own testing, and really why they need to do that,
100%.
So this is good, bro.
100%. I think people will get a lot of value from it. I mean, just showing how using those parameters and being selective will just help your trading. Like, it will remove some of those emotions that can get in the way from taking multiple losses,
Right.
and
And,
watch
and
the
I think the
market.
confidence is the biggest thing too. It's going to give you more confidence when you show up to the
Totally
desk.
agree.
That is
Yeah.
something that you and I both struggle with in general. So I think the back testing and proving to ourselves with our own hard work on a chart and doing the research that it's there, I think that's all, you really have at the end of the day. You know what I mean? Because there's no opinions about it, no nothing about it. It's there. It's fact.
Well,
Price.
yeah. And we know with trading, it's uncertainty. You
Right.
never know what's going to happen.
Yeah,
But
bro.
having these results in front of you, you kind of know. Like, not that but
No, but you're
at your
shifting
head,
probabilities.
exactly. You're aligning all these probabilities and parameters in your favor. And that's what's going to make you, I think, anyone a successful trader. When you have those results in front of you, you know how the system performs, you know the results, you know how many losses you're going to take, you know your max drawdown. It's just, you
It
can't
puts you
argue
in the
with that.
driver's seat.
Exactly. Yeah.
Yep.
Yeah. It gives you some form of control.
I love it, bro. This has really been a really good video. So I appreciate your time a lot, dude. I really appreciate
No
you putting in
worries.
the work and then wanting to share it with all of us. So again, for everybody who's watched all the way through, comment below if you have any questions, if there's anything else that we need to clarify. Make sure you connect with Jerome too. I'll put his Instagram and his YouTube down in the description. Go follow him, subscribe. He's still pumping out content. So now you got two of us throwing content. And now we just need Lindsay to start making videos, bro. Then all three of us are good.
Oh man, that would be awesome, eh?
Yeah. But thank you, bro. I appreciate the time. Again,
No worries.
for everybody watching, thank you, and we'll see you in the next video.
See ya.